TV. This is Markets Today. I'm Sakshi Batra, and on this show, we discuss everything about the market's closing action to really help you make sense of what happened today and what can you expect going forward from here. Joining in to discuss the contours of the markets and how should you as investors be approaching the various sectors and the stocks right now that are in focus. I'm joined by Kranthi Bathini, Director Research at WealthMills Securities. Welcome, Mr. Bathini, and glad to have you back on Business Today TV. Well, on a day when the Sensex has again tanked about 500 points, we've seen losses in IT, banks. The Nifty has also ended below 16,500 odd mark. Of course, there are some stocks here and there that are actually taking the markets or stemming the market's fall. But what do you really make of the kind of market, fall that we've seen in the last two trading sessions, and what do you expect going forward?
Actually, after a phenomenal recovery, what we witnessed last week, ahead of the Fed meet, markets and the traders want to take some cash from the table right now. And what we can see is as long as we are above 16,200 levels of Nifty, we are in a positive range. What's happening in the market is last couple of days, ahead of the key announcements that are going to influence the overall global market, we are witnessing a consolidation in the market right now. So better to stay on some amount of cash before the crucial Fed meet and the outcome of the Fed meet. So that's the reason we are witnessing last couple of days some kind of profit. We are witnessing broad-based spectrum.
Right. So I wanted to ask you on IT, how are you really approaching this space? The IT pocket has been the biggest underperformer today. The big heavyweights, Infosys, TCS, have alone dragged the Nifty by about 55 points today. And not just the large caps, we're also seeing the mid-cap IT stocks fall sharply, persistent emphasis, L&T Tech as the top losers today. How does one really approach this whole space? We have seen a long time when these stocks have actually been underperformers. Are they near bottoming out, or how should really one understand that what's going on here?
Actually, one thing before commenting on IT, what we need to see is the stock performance in past 1 year. All these stocks, especially the mid and large cap IT stocks, they have given a phenomenal returns to the investors in past, I can say, last 18 months. So post that, what we are witnessing is ahead of the rearrangement that what we are witnessing in US, and the inflation worries and the recession worries of US, despite of getting depreciated, dollar getting appreciated to 80 levels, right now there is some kind of skittiness around IT right now. So and if we observe the results keenly, what we can see is clearly there is a margin pressure in IT for the companies growing the expenses with respect to the attrition, and also the margins, putting the pressure on IT companies. So at this moment, the large fund houses, mutual funds, individual investors, what they're doing is they're trimming up their profits, one hand, and to bring the fresh money into the IT stocks. People have a way of approach. They just want to wait and watch how the things are going to come in the global space, because global IT budgets are crucial thing. If we have a confirmed US getting into recession or soft landing, whatever we call, that will have a major impact on the IT budgets. So at this point of time, this is the fear that is creating pressure on IT at this moment.
Right. Also wanted to ask your view on the banking space. I mean, like this space was in the recovery phase. It seemed like the banks are finally getting their mojo back, going to take the lead now in this current market recovery from the last 6 months of volatile trade that we have seen. What are your thoughts here? The banking earnings have also come largely on the positive side. Today, again, we've seen Ujjivan Small Finance Bank that has surged 10% after the earnings. Should one really go for the top rung or these mid-rung banks? And if at all, what kind of returns can they really give all the investors?
Yeah, it's a good news for the banking stocks, Sakshi. After a phenomenal, after a long time, we are witnessing some comeback in banking stocks. Especially what we can see is the worst is over, it seems, for the banking stocks. Companies, the banks like the large cap banks, especially for ICICI Bank, Axis Bank, are posting good set of numbers. Of course, HDFC Bank also, we can consider these numbers are good set of numbers because of the size of the company they operate, the volumes they
Yeah.
operate. So what we are going to see is if the economy has to come back on its own, uh, and banks are considered to be the center uh, of the economy. So if the economy has to run well, banks has to do well. So what we are seeing is again the investor interest is coming back with respect to banking stocks are concerned. But what the mozo missing in banking stocks is, because Indian banks have been, especially the private sector, large cap corporate sector centric banks have been the darlings for FIs. Right now, the
Yeah.
FI participation is not there. This is the reason we can see some kind of subdued action in banking stocks right now. If the FIs
Okay.
are coming back, the first sectors to take the driver's seat is going to be the banking and financial services.
Okay, understood that. One more space which is in focus today is the telecom pack with the kickstarting of the 5G spectrum auctions. The big four groups that are participating are Reliance Trio, Bharti Airtel, Vodafone Idea, and the new entrant Adani Group. How are you looking at this entire space amid these auctions? What can these auctions really provide to these telecom companies? And in case somebody wanted to play this theme of telecom space, is there a good trade here that one should look at?
Sakshi, for a trade with respect to 5G is concerned, I don't think so. There is a big headroom left for the investors in this space. So we are also
Okay.
watching carefully how this whole episode is going to play in the coming days, because in the initial stages, the news was Adani is going to participate and give a big competition uh,
Yeah.
to Jio. But after looking at the deposit they made, the E&D money they deposited, they are not going to keen with respect to this sector is concerned. So the major fight is going to be between the existing, I can say, the three operators. So we are also watching this space carefully. But I don't educate the investors to play the 5G play immediately until unless there is much greater clarity that comes into the picture.
Yeah, understood that. One stock which has been focus from yesterday, and has been in the headlines for the wrong reasons is the food delivery giant Zomato. The stock is down 22% in just the last 2 days after a sharp fall of 11% yesterday, and hitting an all-time low. Again today, Zomato is down over 12%. It is now it shut shop at 41 rupees. Your thoughts here on those who are holding Zomato right from the time of its good days, post its listing, and those that saw the highs of 169 in November 21. What about those investors looking for opportunities today? Because I remember clearly, last year, whenever we would speak to experts about it, nobody was really sure about the profitability path that Zomato will take, but they would definitely look at the opportunities it is creating, the kind of value it is creating, the demand it has. Looking at that, they would still say that if it comes lower, below 50, then perhaps it will turn a good bet. Your thoughts on Zomato now?
Sakshi, one thing investors need to keep in mind, the highly priced stocks and highly popular stocks never created money to the investors. They need to keep this theme always in mind. So when Zomato was there during the IPO season, everybody were gung-ho about the stock, and there was a
Yes.
clear-cut buzz across the entities. So what we can see is the value destruction already happened in Zomato. They have done uh, gross mistakes like buying some kind of acquisition, what they did in last couple of months time. Again, they turn out to be the loss making companies, and the whole issue around Zomato is when they are going to turn positive with respect to their profitability is concerned. As
Yeah.
long as they are lingering with respect to this profitability is concerned, so the negativity comes around this stock. Right now, the stock witnessed a decent correction, I can say, sharp decline from its IPO price. So investors who have a high risk appetite, uh, they can probably experimenting in these kind of stocks. I'm clearly saying it's going to be an experiment for the investors, but those who are less risk appetite, who are risk averse investors, definitely they can avoid these kind of business models, because sustainability of business models are important. But at this valuations, it looks very attractive for me, but only high risk appetite investors only, they can venture into these kind of business models and these kind of stocks. Even Jeffries, they came
Okay.
up with a report
Yeah.
today with a interesting valuations for this company.
Right, absolutely. Well, thank you so much, Mr. Bathini, for being with us and sharing all these insights into various sectors and stocks that we've spoken about. Zomato clearly is in the pain, but for those investors looking at opportunities, this could be a good, attractive zone for you to have Zomato in your portfolio only if you are a very high risk appetite investor, as per Kranthi. Thank you so much, sir, for being with us and sharing all these insights.
Thank you, Saksha. Good to speak to you.